Good evening, everyone, and welcome to Crypto Pulse Weekly, your weekly review of the markets and analysis of the price action, technical, and fundamentals. As usual, this week, we will start with looking at what's driving the market and, of course, what the price of Bitcoin is saying and what the most important meaning or meanings are for us as investors, as swing traders, and as speculators. So let's get started without much ado. So we'll be looking as usual at our market updates, then we'll go into vital signs, then we'll talk about the crypto drip, which is the knowledge transfer. Today's knowledge transfer is just going to be talking about, we're going to be discussing profit taking, essentially. It promises to be a very quick one today, because I have a number of other things lined up after now. So let's get cracking. So in the news today, you will have observed that the price of Bitcoin has dropped about 10%. 10%? Yeah. About 10% from the all-time high of 67,000. I mean, needless to say that we made new all-time high during this week. And I need to bring to your attention, actually, that I did predict that we were headed for 67K. The market stopped exactly at 67K. And now we've taken a 10% correction down to 60K. There are many views on the correction. Some people think we'll go as low as 58. Some people say we can go as 57. But I see 60K as a very good support level, both technically and psychologically. But having said that, 10% correction is a very healthy correction, as I will show you on the charts in the slides to come. So the reason we need correction is it's just like breathing in and breathing out. You can't continuously breathe in without breathing out. You're going to get saturated both mechanically and naturally, because once you expanded your lungs, you can only expand your lung for so long. You have to take in all the oxygen, and once you've used up all the oxygen, at some point in time, you'll have to exhale, and that's exactly what the market does. It breathes in and out. So when it breathes in, the market goes up, and it breathes out, the market comes. But one thing is sure, though, this particular one is it is breathing in and breathing out in ascending order, if I may say that. So the 10% correction is expected. I've been expecting a correction even before the all-time high, but the market decided to first hit all-time high before taking the correction, which in my opinion is still, it's still very, very good, because you can't continuously have an up market without a correction. It's an unhealthy price action or price behavior. And if you see any market like that, it's a sign that there's going to be a massive dump, not even a pullback, when you have price going up only. As a result, I think this is a very good one. Some people were joking today that bye bye to the bull run, see you in 2025, and there was like, what do you mean? Like, yeah, he said it was just a joke. Really, we're just getting started. To be honest, the bull run has now entered the second gear, if I may use, or the last gear, if I may use those words. And as I said earlier on, our crypto drip today will be discussions around profit taking. And the reason I'm talking about it is because I don't even have coin spotlights today, because any coin I'm going to be talking about from next week up until the month of basically the end of the year is going to be coins that you can hold or should hold against the next bull run. So today we'll be talking about profit taking in our crypto drip section. So as you observed, we've taken that dip. Ethereum has also hit its all-time high and has taken that correction. We're still holding up above 60K. It's Friday night. I don't think there'll be much action, to be honest, tonight versus over the weekend. If the whales do not plan to dump over the weekend, then I think 60K we hold. And because before now, actually, I think we held at 60K for about, hold on a second. I think we held about 4 days. We held about 4 days above 60K after breaking it since the first time in May. So I do not see us going, and there's a, okay, that's another thing I did mention. There's a large, not large, but a significant supply and demand zone around 60K and also around 58 to 56K. The one for 58 to 56K is well traded. The one for 60K has probably just been traded for less than 10 days in the whole of Bitcoin history. But having said that, there are two schools of thought. We dip down to 57K or 58K, and then we take off from there, or we'll go sideways from where we are right now, and we take off from there. Whichever one, whichever path we take, is still going to lead us to yet another all-time high. So let's continue. In terms of regulation, you'll probably be aware that we have two Bitcoin ETF fully live now. One is about to be approved or has been approved and should be listed next week, I think. In terms of overall sentiment, I think the bullish sentiment is sustained. And the bottom of this correction is imminent. It's either we already have the bottom or the bottom is very close by. But from what I see, I think the bottom is imminent. It's either we're already there or we're very, very close. So let's get into the other news. In terms of our assessment of the bull run, basically, we've hit 67K. We're holding above 60K. This gives us momentum for a higher high. My immediate projection is 74,000. I think that's the next high that we're going to hit before we either pull down or take some consolidation. But I think we're going to 74,000 from 67, from this 67K all-time high. From where we are right now, that's about 21% gain, which is quite decent from where we are right now. So overall, I think that's what we have, but bull run still in play. My projection is that we'll hit 74K before the end of, or by the end of next week. Some projections says we can hit 100K by end of the month. I have my fingers crossed, but right now my projection is 74K for end of next week at the minimum or at the latest. ProShares, I talked about ProShares last week. They got the approval. They got listed on NASDAQ. Their ticker is BITO. If you're into buying ETFs, might not be a bad idea, considering the fact that they're almost completely almost oversubscribed now. I'll talk about that later as well. But as of yesterday, they already hit a market value of 1.2 billion. In fact, that ETF is the fastest growing ETF in the history of New York Stock Exchange. The only other asset that holds that record was gold ETF. So it tells us that there's a lot of interest in getting exposure to Bitcoin. And this is going to further drive adoption and further drive the price. As I will tell you a number of things today as well that's happening in the background and people are not aware. And one of such is this. PayPal recorded their largest BTC volume in terms of transaction volume today or in the last 24 hours since the last crash in May. So they processed the largest amount of transaction volume since the month of May when we had that crash in the price of Bitcoin. What this tells me is that people who already have exposure to cryptocurrencies through PayPal are buying the dip, quote unquote. And you know what that means. If the retail is buying the dip, no matter what is happening in derivatives, the price is eventually going to mirror each other. So not only that, PayPal is now looking into allowing people to withdraw their crypto into decentralized wallets. For me, that is huge. That for me will be the major tipping point because A lot of people have PayPal accounts. I mean, we're talking about 353 million customers all over the world. Not to talk about the 25 or 22 million merchants. So if people can migrate and withdraw their crypto assets to and from PayPal, they've essentially made themselves primary competitor with Binance, which is the most capitalized in terms of raw cash and cryptos. I think that's huge. I don't know when they plan to deploy that, but I think it's gonna see a lot of on ramp. Let me use that word, meaning a lot of people are going to FOMO in massively if PayPal succeeds in doing that, because what it means that people who have hitherto been worried about, I can only sell my Bitcoin on PayPal. I can't move it to my wallet, and I can't do anything else. They have the opportunity now to do that. So, in another news, a very interesting one at that, Walmart. If you remember last month, there was this news about Walmart and Litecoin, and Walmart came out and made a public statement about how they are not interested or they are not involved in Litecoin and all that. So apparently, if you go to I can't remember this corner in Walmart. They call it a particular name. There's a kiosk corner inside Walmart. If you go there now, some um in some Walmart stores, they're installing ATM, Bitcoin ATM, and they've installed 200 already this week. And from what I gather, their plans to install 8,000. Now, it's all happening in the background. I mean, if it wasn't that somebody went to a Walmart and confirmed and took the picture and physically said, I can withdraw it, and the guy happened to be working for, I think, Coin Market, no, Coin Telegraph, or one of these CoinCap, one of these crypto news agencies, and took the picture. That's why people thought it was another, hype. But it's happening for real. And again, these are the undertones. When people talk about, Bitcoin is so volatile, the price is going up and down, take away your eyes from the price action and look at the overall adoption. And like I said before, the next 5 years are extremely critical because you will see massive adoption on a scale we've never seen before for cryptocurrencies. Just think about the internet in the early 1995s and the 96. I mean, people in third world didn't even know about internet then. But even people in America were only using Windows 95, and the internet then was just pictures of cats and places. That was what everybody knew about the internet. For somebody to now be marketing you at that period that what, we're going to be selling and buying on the internet, and you invest into this stock, it will look crazy at the time, almost impossible. But here we are, the biggest companies in the world are basically internet mediated or internet originated companies. So in the same way, the richest people in the world in the next 20 years will be definitely will be crypto Bitcoiners, most likely. And the biggest companies definitely will be companies that are either running directly on crypto or cryptocurrency mediated businesses. So when people ask me about where's the price of Bitcoin, if it goes to zero, I'm going to buy. If I have the money to buy, I'm going to buy, because for the first time in human history, we've been able to consolidate monetary energy into a digital form that makes it extremely fungible anywhere across the world. And it's more functional than any other medium of exchange that we've ever come up with as a species. So it's important to realize that this is a seismic shift that's happening um, in the exchange of value and storage of value. Let me put it that way. And as a result, anybody that gets in early, you're guaranteed a lion's share, just like that's biblical pool of Siloam story where anybody that gets in first after the troubling of the water gets healed of whatever problem he has. In the same way, anybody that gets in early, people that got in 5, 6 years ago and knew what was this all about, many of them are millionaires today, to put it mildly. So do not get yourself worked up about a 5% drop or a 10% drop or 50% drop. In this larger scheme of things, it doesn't really matter. I mean, when you look back at the charts, you're not even going to be able to see it. I'll talk about the chart later, and I'll come back to this top line. But I just wanted to say that for people worried about my crypto going to zero, if the project is a good project or it's a general token like Ethereum and all these platform tokens, you are guaranteed that your investment is going to give you multiples in the years to come. Having said that, let's go on. Bitcoin futures for ProShares, the first one that came out on Monday, is now close to the upper limit of its contract, meaning the approval they got from SEC was for a specific amount of contracts. It's almost fully subscribed as we speak, to show you the extent of the interest that both individuals and institutions are putting into these things. And I remember a statement from one of Facebook's founder during the week when he said that he's afraid that he might be underinvested in Bitcoin. I mean, that's probably one of the richest people in the world. If you are a co-owner in Facebook, you're a big person, but he still feels he's underinvested. Not to talk of the moves that Facebook has been trying to make here and there to ensure that they get a piece of the crypto pie. We'll see how that pans out. I'll leave that story for another day. In another news, okay, I mentioned this one. I mentioned this ETF. So SEC will probably need to extend their contract limit or give them another one. VanEck BTC ETF also getting approved. I think they're probably going to start trading next week. That will be the third ETF that will be approved in the space of 3 weeks. VanEck is a digital is an asset management company, and in fact, they already have approval in Europe. I covered it about 6 or 8 months ago that they got approval for European-based Bitcoin ETF. And that one actually was based on spot. It wasn't based on futures. It was a spot-based ETF. So now they're applying in the United States to get their ETF sanctioned and approved. Same goes for Valkyrie. Valkyrie were the ones that debuted today on NASDAQ. I can't remember. I think their own ticker is B2 or BTF. I can't remember. I think it's BTF. BTFD means something else in crypto world. That's why I laughed. But the debut on NASDAQ today, and as observed or as expected, I think there will be a lot of volume coming in. More so that the price had dropped 3% since their opening. I think there'll be a lot of volume coming in for them on that ETF. In another funny and very ridiculous news, I saw during the week that China is attempting to, introduce taxes on crypto a few months after they chased away all the miners, and I felt that was quite ridiculous. So whoever was their policymaker or strategist was quite dull and stunted in reasoning, because if you wanted to tax something, you should have made sure that you provided the environment for it to blossom. But because allowing crypto to blossom in a place like China, it's negating the effect of communism, because monetary independence is one of the first level of true independence. What the current monetary policies that we have all over the world has done is literally enslave us. It's literally enslave us. And what I mean by enslave us is that first, they took away the gold from everybody and made it illegal for people to own gold way back, over a century ago. Then they said everybody should bring their gold. Then they said gold was, the standard of exchange. Now, when they found out that the governments were failing and were going broke, they decided to change from gold, and then they rubber stamped the US dollar, and they literally rubber stamped what you call the central banking system's monetary policies, meaning that you can print money at will as long as you can explain it with economics. That's what's happening. I usually joke that economics is the biggest scam. Not because I didn't like economics as a student, but the old concept of economics as relates to macroeconomics and current global monetary policy. It's a giant Ponzi scheme essentially, because it's like shit coins. They keep printing money to solve problems, short term or medium term problems, as a way of escape, and nobody's going to stop them. But this provides true liberty to the people, because what it means is that the value that Bitcoin holds is based on the nature and the volume of the holders. So it's the value that is ascribed to it by the holders that determine the value of the token. And because the government has no hands and no ability to print more of it, it totally retains value. It's like buying prime real estate in Lower Manhattan in 1900. Now, if you bought it at the time and never sold until now, you probably have made 100 to 1,000x on the original purchase value of that money. One, because economies have gone down and monetary value have been recalibrated over the period. And even between 1970s and now, when they changed to the dollar from the gold standard, a lot of devaluation has happened. So that prime real estate now is worth hundreds of its original value. And that's why, wealthy people buy real estate. They want to look for something to retain value over a long period of time. But the way the world system works now, even real estate will lose its value after 100 years, its true value after 100 years. So this is the first time through things like Bitcoin that human beings can actually store value and store it efficiently without any drawbacks. So China coming back to now want to regulate crypto, or tax crypto after so many consecutive bans, I think is ridiculous. I think it's just probably somebody's wish or wishful thinking. That's my opinion. Um, Going on to an interesting news that happened during the week, and that was this flash crash on Binance US. If anybody was using Binance US, they'll have seen something like this. And I got some questions, people asking me about, what happened here. So this is the daily candle for Binance, and essentially the price of Bitcoin on that particular exchange went down to 8,124. So a couple of things just to clarify. A flash crash like this can be due to, one, a failure in algorithm in which a particular algorithm attempts to sell on the market. Two, a big wallet holder mistakenly selling on the market or deliberately selling on the market. What does that mean? You see, in every exchange, let me just open Binance as an example. In every exchange, both for crypto and forex, or especially crypto and forex, you find out that there is what you call an order book. The order book is basically the people who want to buy and the people who want to sell. Now, on the order book, you have people who have the token of choice, and then they will say how much they want to sell it. And depending on how big that particular exchange is, they can have tons and tons and tons and tons of tokens. So the pairs of those tokens, let's say Bitcoin and USDT, is called a market. So the market is the various pairs that are available for any particular token. So in the case of Bitcoin, you have Bitcoin and you have other exchange other tokens, like let's say Bitcoin and Ethereum. So here is what I'm saying, just to make it clear. This is an example of Binance Exchange, Global Binance, not Binance US. Now, here you can see that there is an order book, and that order book shows people who want to sell. People who want to sell and the amount they want to sell, and people who want to buy and the amount they want to buy. Now, the people who want to sell will set their prices at the price they want to sell. The people who want to buy will set their prices at the price they want to buy. What I'm saying is that if somebody, a whale, and wants to sell, there are various ways to sell. You can sell limit orders, which means you set the price just like everybody else have set their prices here. And then when the when the price hits that, when the market hits your price, it starts to sell off your token at that particular price. Or you can sell by the market, meaning I want to sell, if I have 500 Bitcoin, I want to sell everything now. And then I just drag this slider and say, I want to sell 50%. I want to sell on this particular account, I think I have 0.001 Bitcoin. So if I want to sell everything and I say sell, what it means is that it's going to sell everything that I have on that trading account for this pair. So in this case, it's Ethereum that is to be sold. If I say sell Ethereum, if I had 100,000 Ethereum, it's going to attempt to sell everything at the current price of 0.0649 Bitcoin. So what happened on the day was that, well, they blamed it on an algorithm, but I think it was just some fat fingers that made a mistake and attempted to sell $32 million worth of Bitcoin on a very small exchange. So understand that Binance US is a separate entity. And I've said that over and over again. That's why Binance can operate in the US, because Binance US is a properly regulated US exchange, just like Kraken, Gemini, and Coinbase. So this is a very small exchange compared to the Binance US exchange. So this guy attempts to sell $32 million worth of Bitcoin on a small exchange. Of course, it's going to consume the other, meaning it's going to consume every buy order that's ever available on this exchange. What does that mean? When it says sell, like it did, all the others here in green, it's going to consume everything, no matter how low they get. And some crazy people apparently they went to put their buy orders here, which I think was fantastic. I think I'm going to start doing that from now on some small exchanges. Meaning some people add orders here, big orders to buy Bitcoin here, and some people add orders all the way down. So anybody that bought and had their order at 10,000, essentially they made a 5x immediately from that trade. So unfortunately for the seller is not going to be able to sell all of that Bitcoin at 66,000. They're probably going to sell a few at 66,000. Then because it's such a large volume and the other book might be so clustered around, 60 and 50, and then you have gaps all the way down. Most of his Bitcoins will have been sold between $36,000 and $8,000 on that particular exchange. Now, the reason it happens, or like somebody said, why can it happen? Is it not the same price? The reason it happens is because the exchanges are wired to the prices. They have APIs that send price feeds between exchanges, but those APIs are time-based. I just decided to take time to explain this. Those APIs are time-based, meaning that they're like interfaces in an IT terminology. Interfaces are like things that connect systems or infrastructure to each other. They're like joints. So those APIs send the information on a periodic basis, usually every minute or every 5 minutes, across all exchanges. So what happened here is because the guy clicked on the market, what would have happened if let me go to a minute chart. What would have happened to look for that minute? It might take me a while, but I think it's important for the purpose of this discussion. So what would have happened was that in the minute that the guy clicked that thing, yeah, this is it. So this is the minute. At exactly 12:34 that he clicked that sell order, what would have happened is it would have consumed everything that the exchange had around the normal cluster, which is usually between 10 and 20% away from the market price. And then there are some crazy people who know that things like this do happen from time to time, who will have set big orders, like 5 Bitcoins or 10 Bitcoins or 20 Bitcoins, somewhere far away, like you never thought would happen. So what would have happened is the guy would have only succeeded in selling maybe like 5 or 10 Bitcoins at this price. Most of the other Bitcoins would have been sold anywhere between these 8,000 and 30,000 or 40,000. So that's exactly what happened. And you can see, because it's only for 1 minute, it's a flash crash, it's only for 1 minute. The guy had sold his Bitcoin at different prices. But anybody who had pending orders or limit orders way higher or further away from the market will have made supernormal profits just on the back of these blips. They don't usually happen often like this anymore on the bigger exchanges like the Binance Global or Coinbase. You don't have that opportunity anymore. But on smaller exchanges, it's still a regular occurrence. In fact, on the back of this, I want to set pending sale orders of my tokens on smaller exchanges just to make sure that when the bull run is about to blow off top, I'll be the only one with that. I'll be the only one with that price target. Like, if somebody decides to buy on the market, then they will buy my top as it says. Anyway, so that's the reason why Binance US suffered that crash. I'm sure some very small percentage of guys made a killing of that client flash crash. But that's what happens. Not an unusual occurrence, but it used to happen a lot in the past bull runs because liquidity was very low, and I mean there were very few participants. No, no, no. There is no correction. The person is unfortunately for that person. There is no correction because it's a computer, or how do I put it now? It's all computer mediated. What the guy is saying, let me show you my screen again for the what the guy is saying is that I want to sell 100% of my holdings. So if I had 500,000 in Ethereum and I say sell on this pair, let's say it was Ethereum to USD, what would then happen is the the computer on the exchange will look at all these orders and the ones that are not showing here and look to see if you can consume all the orders with everybody spending order. If it can, it will just knock them off. So if I said I wanted to sell 12 like this at this price, immediately I sell it, you notice that the price changes and removes because the amount or the volume I want to sell, there are people available to buy it. So as long as there are people available to buy it, the system will continue to execute until it gets to the lowest price. But if there are no lowest price, usually the exchange itself has a market making software that will make sure that at a particular bottom price, there is liquidity to buy back for anybody that wants to sell. So what the guy has done was that I want to sell on my Bitcoin right now at 66, and he had 32 million worth of Bitcoin. Unfortunately, on the exchange he wants to sell it, nobody was willing to buy that much at the price he wanted to sell, which was 66K. So what the computer and the exchange will do is sell all the can at 66K, sell all the can at 65, sell all the can at 64. And apparently because he couldn't sell everything, the market had to go to 8K. Some wicked guy, some wicked guy bought his Bitcoin for cheap at 8K. There's nothing the guy can do to remediate that. I would say if the guy was a private person, I think he has paid the what you call the market fees for not being learned enough to understand how exchanges work. Because if you have 32 million worth of Bitcoin, there is no way you should be selling on the market. No way. I mean, apart from the fact that you're going to cause a crash, even if it was on Binance Global that did it, you'll probably be able to get the market down to maybe by 1%. There is no way you're not going to crash the market. But apart from that, you're not going to be able to sell at the price of your desire if you want to sell. And that's one of the reasons why I said, it's important today that we talk about taking profits. Let's move on. In terms of vital signs today, interestingly, we've only gained 6 billion and 5 billion respectively on the markets in the last 1 week. And that's not expected. I mean, it's not unexpected because in the last 1 week, the price of Bitcoin has made new all-time highs. The total market cap have made new all-time highs. We've closed the highest possible weekly candle in the history of Bitcoin in the last 1 week as well. And that's why I said, I think the correction is justified. I think it's expected. And we expect that after this cool-off, the market will start to pick up again and continue into new all-time high. Somebody asked me a question. What if you made the sale? Yes, that's what I'm saying. If you made the sale at limit order, exactly what I'm saying. It had, like, I can't calculate off the top of my head how much $32 million in Bitcoin is, but that was the volume, apparently. But let's say you had 1,000 Bitcoins, you had 5,000 Bitcoin, and wanted to sell it on the market. And the market that he wants to sell it on, which was Binance USD's exchange market did not have that much people that wanted to buy Bitcoin at 66K. I mean, 1,000 Bitcoin at 66K. So when you say market sell, the interpretation to the exchange software is that sell it at any price, you can sell it. Just give me my money back. So what the market does, or what the protocol of the system does, it looks at everybody that wants to buy and starts selling all these lines one by one. It happens in split seconds. It starts selling them all by one, so that everybody that wants to buy, well, let me change this to make it make sense. So everybody that wants to buy, sorry. So what I'm saying is that when the guy decided to sell when the market was at 66, there will be orders like this, just like this, 66, 65, 9. Yes, it's a mistake. If the person is not a newbie, it's a mistake. Or the person might be a newbie who just made a lot of money in time past buying Bitcoin and just thought, I need to buy or I need to sell. So, which at any rate, the person's schoolboy error has costed them a lot of money, because the person might have not bought the Bitcoin at 8K, for instance. But that's the consequences of having very large orders. So, if you're taking my trading fundamentals course 1 or 2, you'll have heard me say that if you have big orders, the best way to exit the market is through limit orders. Because if you exit on the market will sell at any price available. That's what this command means. Market, it will sell at any price available. If you say sell at limits, then it will ask you to set the price. In which case, you can set the price. And the guy was not even smart about it, because if you have big volume, you shouldn't be selling on impulse. You should plan your exits and set limit orders at those prices, so that when the market gets there, it starts to sell off. And that's how market makers work. Market makers can have 55 billion in a particular securities, and you see all these sell orders. Half of them are from market makers, especially the one with big volumes, because they can't just come on the market and sell. Because they come on the market and sell, the algorithm will try to sell everything at any price available on the other side of the order, and that might crash the price and take their prices to undesirable levels. So it's not advisable. I mean, for small tertiary accounts, you can sell on the market anyhow. But when you start making money, big money, you need to be, especially if an exchange is not that liquid, you need to be very careful, because you might witness what they call in forex and stock markets, what they call slippage. They call it slippage for a reason, because it means that you are not getting filled at the price you desired. So you'll be getting filled at lower prices, as long as there is nobody that is ready to match the original price at which you wanted it to sell. So that was the story of the fat finger as we call them, that attempted to sell on the markets on Binance US. So it was a mistake. It was a person, and it was an algorithm or a system as well. It was a mistake as well, because you can't market sell that volume of Bitcoin or any assets for that matter, especially so there are so many things. So people can make money from SHIB or Dogecoin and become, overnight millionaires, and think that the market is just there for the taking, and maybe use the money to buy Bitcoin, and now it feels that they can sell off and go and relax. It's not that easy, because before you even consider selling, and I'm sorry, I'm going into the crypto drift for today already. Before you consider selling, you need to look at the volume, which means what's the volume that is being done. Let me take you back a bit. So this is BTC USD. If you are looking for a sell opportunity, you don't need to go there. I can actually see it here. You need to check the volume, 24-hour volume, which is here. You need to check 24-hour volume of that particular exchange or that particular platform that you're trying to sell on. Because if you see, this is global, this is Binance Global, and Binance Global has a volume of 1 to 3.4 billion. So Binance Global can take it, meaning this pair of BTC USDT can take a 3.4 billion order because there is enough liquidity, there are enough people to buy and sell. So if somebody wants to sell 1 billion, the person can't market sell 1 billion because that's 1/3 of the total 24-hour volume. It doesn't make sense. So the best the person can do is to make sure that little by little they are filling in the stuff, or just set the orders, the limit order, sell at 61, sell at 62, sell at 63. What then happens is as people are buying and more people are buying and more people are buying, their orders are getting filled. And that's the important. That's one of the importance of taking the trading courses that we started last year. So for anybody who's on the course or on the call, and you've not taken the trading fundamental course, I recommend that you take those courses. Very, very, very important. So right now we're still where we were last week, predominantly in terms of overall market cap. And we've taken the correction, and the market cap are still stabilized. So let me show you. Let me show you the overall market cap. Total. Yeah, I just showed you the volume on exchanges. Yeah, there's a particular, I don't remember the site's name. I'll look for it. I'll post it on WhatsApp group. There are sites that aggregate the volume on exchanges. But I mean, the volume I'm usually interested in is the volume of the asset I'm trading, or the markets I'm trading, because that's the one that's important. If you so somebody said I should click on my Binance wallet to see my account overview. Don't worry, I'm not a wheel. I'm just a shrimp, as they say. Anyways, this was our previous all-time high. That's why I had that blue line on it. That was around 2.6, yeah, 2.582. Now we've broken that in the last 3 days. We've taken a correction, which is where we are for the last 2 days. I think this is the lowest that market cap will come before another leg up. And if you remember what I said the destination for this market cap in the near time is 3.8 trillion US dollars. So I think the market cap behavior is pretty much on point, to use that word. So the person asking for the volume, you can always get the volume for the asset you want to trade. Like here, let me look for trader exchange do I have on this browser. Let's go to Hotbit. No, Hotbit is not here. KuCoin. Yeah, just to show you that it's usually across all exchanges that you have. So this is another exchange, KuCoin. If I go to markets, immediately you can actually see this one. If I go to markets on Binance as well, I was going to show you that you can see the markets for specific pairs. So this is Bitcoin. If I go to USD, you can see the markets for, it's still okay. You can see the market for USD. This is Bitcoin USD. You can see their volume is 572 million. A million, yes, that's million. 572 million. So what that means is that you can't come to this exchange and try to sell $1 billion. In fact, even 100 million is going to shake the price on this exchange because the liquidity is small compared to the volume you have. Let me look for another one. One of these smaller exchanges that I used to frequent back in the days. I think I've sold all my tokens or most of them now because I'm not ready to carry any bag for Yeah, this is another one. This is a very interesting one actually. This exchange is one Korean exchange, I think, just to show you the discrepancies in volume. So yes, BTC USD, same thing. See, volume 29 million. So in this kind of exchange, you can't. You're going to kill. You're going to crash. You're going to crash the whole other board because the overall volume that's been traded right now for the past 24 hours is 20, that means just short of $30 million. So for people who want to sell, you need to take that into cognizance. Otherwise, if you're going to market sell and you don't have enough volume to take in your orders, then you're gonna get sold off at the next available price, and then you'll be heavily subjected to slippage, meaning markets the platform is going to sell you at any price available. So that's always why, especially for big positions, you definitely need limit orders. I've done like 10% of my trading costs on today because of these questions. Anyways, let's go on. Fear and greed index. I think we've taken a little bit of pull off. Well, we were going towards 90 yesterday before we came down. So it was 84 yesterday. As you can see, as I always say, this is always a good indicator of when the market is going to pull off, because once you see the stuff, increasing and increasing, and there is no pullback of any sort in the fear and greed index, definitely you will see that the exchanges themselves, the market makers will react, because there's something else called funding rate. I'll talk about funding rates maybe next week. There's something else called funding rates in the derivatives markets or in the futures markets, where, how do I put it now? Funding rate is like percentage of how much money people have borrowed from the exchanges to take on leverage positions. If the funding rates get high, the exchanges have inbuilt algorithms to shock the markets and wipe out those leverage positions to reset the funding rates. So sometimes when you get crashes on the markets, it's because the exchanges need to reset their funding rates because the funding rate has become too high. I'll talk about funding rates in details next week. But right now, we're about, yeah, give or take about 10% of the fear and greed index. If the price stays the same over the weekend, then we're probably going to remain in the same region. But if we drop below 60, I think this will quickly go back, because some people are already pointing now that we have come to the end of the bull markets. Quick answer: we've not come to the end of the bull run. As a matter of fact, mathematically speaking, each of the bull run has extended the previous one by 35% in terms of timelines. So if we apply the same metric, this current bull run, it gives us till anywhere between January and beginning and end of January for the bull run, basically. But I mean, it can be faster than that, but definitely will not come to the end of the bull run. You will know when we come to the end of the bull run. Even yourself, you will know that, the market has become crazy, because it is going to be crazy. So as I was saying last week, we're just on the tip of euphoria. We're just getting close to euphoria. We're not there fully. So we're on the tip. Once we blow out of 67K to 74, then euphoria begins. Because what then happens is, think about it this way. When Bitcoin gets to 74K, a 10% move from 74K, stay with me, a 10% move from 74K takes you into 81K. Another 10% move from 81K almost lands you in 90K. So the exchanges have the algorithms calibrated in percentages, and that's how they make the market. When they set the prices on their side of the order book, they set it in percentages of the current price. So just like when Bitcoin was 10K, move to 11K was just 10%. So now Bitcoin is 60K. 10% move is 66K. From 66K, another 10% move already takes it into the 70s. So the bigger the way I'm going is the bigger the numbers, the bigger the jump. And when I said that my personal projection for the price of Bitcoin is 250 to 300K, it's on the basis of this because when the price gets 100K, 10% move is 10K. And 10% move is nothing in crypto. 10% move is nothing. You can do it. I mean, probably you guys have seen, 100 or 200% of crazy coins. 10% move is nothing when the market is really moving in the crypto world. So it's not unexpected that you will see those kind of move, especially because, as I mentioned in the assessment before now, exchange Bitcoin for the spot market is still dropping. Exchange supply is still dropping, meaning Bitcoin is getting lesser and lesser in terms of volume available to be traded on the exchanges. So it's either these bull runs blow off top is triggered by the derivatives markets because there's so much demand on the ETFs and all that, or it's triggered by the spot market itself because there's really, no Bitcoin to sell. So in terms of market psychology and where we are, yes, we have started getting into the thrill zone because now all of a sudden everybody wants to buy Bitcoin. Back in July, everybody was saying, "Oh, that thing is a scam. It's not going to work." I remember telling somebody that it's not the end. The guy said, "No, but I should have been smart." I said, "But you have not gotten to the end of the cycle. That it does not tie into any of the historical narratives of this asset. We have not gotten to the end. When we get to the end, you will know yourself because you will look at the price and you're like, oh, truly, we've gotten to the end." So, as I said, 200 to 300K is still in play for the end of the cycle. I don't know whether we'll get to 200 before the end of the year, but that's my target and that's my projection for the end of this cycle of Bitcoin bull run. So by the time we get into that point, of course, like if you are in the two profits group and took the classes, you should be out into fiat or USD or not even USDT or any stable coin. You should be out. You should be out of the market. If you're still in the market, well, I wish you the very best for whatever you see on the market, that particular instance. So that's that in terms of market psychology. In terms of what's on the charts, give me a second. Track back this guy. To hide this. Hide animation, 15 controls. Okay, fantastic. Yeah, so I wanted to expand, I want to maximize this. So last week I was saying that, sorry, I need to use this that I want. Binance, no Binance. Okay. So last week I was saying that I expected the price to get to 67K, after which I felt to come down to the upper 50s. We've made that touch of 57K. So the deepest level I think we can get, even if the price continues to fall, 57,500-ish. I don't think we're going to get there because, as I earlier mentioned, we have a lot of supply and demand zones in between. And 60K was particularly strong. In my opinion, I think 60K was particularly strong because we couldn't break 60K for 3 consecutive days before we popped up to 67K. So I think a lot of demand is sitting between 60K and 57K. And bear in mind that even at 7K as well, we stayed a while at 7K. Let me just draw this supply and demand. So make it. Yeah, so if you look back all the way to February, we traded a lot in this zone. So it makes a very strong area of consolidation if price is going to come down. But having said that, we also have traded in this zone now between April and between April and now. So this was April when we first hit 60K. We traded above that zone for 4 days before crashing below it. Now we've traded above it. And if I go to a lower time zone, you see that the market just couldn't break through. And I mean, it's repeated itself again today, even though we sunk 60K. We didn't quite break through 60K. And there's no what's it called? There's no CME on Friday, on Saturday and Sunday, meaning no people to short the market with big money. So what's happening here is usually that the guys on the derivatives market, usually CME and everything, they have a lot of billions of dollars to short the price. So when I mean short the price, meaning they take position against the price of Bitcoin. They're not buying Bitcoin, they're just speculating on the price. So because they're speculating on the price, they can drive down the price in the short term or for very short periods of time and force people to sell who are in the opposite end. Who are on the opposite side of the other book in the derivatives market. So the spot market is different from derivatives. I can't go into that because that's part of my course. If you took my courses, you'll understand what I'm saying. But the spot market is operating in parallel with the derivatives market, but they influence each other. So for instance, the funding rate I said I was going to talk about next week, if the funding rate gets overheated and people decide to sell, and the exchanges decide to cool down the funding rate by unloading shorts on the market, it's going to crash the price. When it crashes the price on derivatives, it's going to crash the price also on the spot market. And that's why that Binance flash crash didn't affect any other exchange, because what happened is it got filled up in that same minute. And that minute did not close. Essentially, that minute did not close at 8K. If it was that minute closed at 8K, then all hell would be let loose, because what it means is that all the exchanges will get API feeders saying the price of Bitcoin is now 8K. Of course, not possible anymore, because there are people, there are experienced traders, both institutional and individual traders who have, obscene orders. That was just an example on a small, but let me try to see if I can log in. Binance. I don't know, Binance.us, I think that would be the, yeah. So just to show you something, Binance.us markets. So Binance.us is different from Binance.com, which is where I just logged into BTC market. So this is the market that guy can say still there. This is the market that guy dumped on. Look at the volume, 118 million, and the guy dumps 32 million. So what it means is that that 24-hour volume, 180, and somebody less than 1 minute wants to sell 32 million. So what will have happened on that day is, as you can see, this order book, all these green numbers will have been wiped out that day till it got to 8K. So very experienced traders and veterans will have set their orders. They just set it somewhere, esoteric, either up or down. Say, I want to buy 0.5 Bitcoin at 20K. 0.5 Bitcoin at 20K is 10K. So the guy just put the 10K there. So for that kind of person, just in case somebody does something stupid, like what was done here, that person just automatically gets that picked up. So the person that's market sell is the person that loses, because the system is going to sell at the available price. And since there's an available price at 8,200, the system will sell at 8,200. As you can see, this is one of the reasons. 170, less than 120 million in volume, total volume in 24 hours. And, somebody tried to sell essentially 1/4 of that volume in 1 minute. So because obviously the exchange can't take it, it wipes out all the other and then gives him the best available price, which was 8,200. As a result of that, because this particular minute also did not close. So what I mean did not close is every This candle represents open, high, low, and close. The wick up is the highest, the wick down is the lowest price. The wick down was the lowest price in that minute. The wick up was the highest price in that minute. But the close, which was this. So the price did closed at 64,700 in that minute. But within that minute, the price dipped as low as 60,000. The reason it didn't affect the other price for all other exchanges is because the close, which is the price that gets sent across the exchanges, was still 64,000, I think, 65,000. So it really didn't do any damage across board. So as I was saying about Bitcoin price projection, now that we've taken this correction from wave theory, suggests that we'll probably be headed towards let's see, be headed towards 74,000 really. Be headed towards 74,000 in the near term, yeah, 75,000 at the most. And because we have this zone in place, and we have this, so Fibonacci, I don't want to talk about Fibonacci lines because I assume you're already taking the course and you know what it's talking about. Because you have Fibonacci lines here and here, it also means that if we don't break this, which is 50%, which is good, it means that we're still going up. If we break it and come down, we still have 61% Fibonacci, which is at 59,000. We're still good. As a matter of fact, this trend is still intact until 54,000 is broken. 54,000 is broken, then there's a near-term correction and we have reached the end. Because things we've not even succeeded in breaking, and we're good in the short term. On a longer time frame, we still have a very long way to be honest. I don't find that chart, particular chart I have, I found that. Yes, this chart. So on a longer time frame, like I said, where the price of Bitcoin seems to be operating in an arc on a very long time frame, I'll show you what I mean. Let me put it in the logarithmic scale. I don't know. Just use it. On a longer time frame, the price of Bitcoin going, sorry, this thing is messed up. I need to set it properly for you to see what I'm saying. But it's going in parabolas essentially since the inception. And currently, we're on this parabola that takes us to this. We're on this parabola that takes us to 102 in the first instance. From 102, I think it takes us to 260 or thereabouts, the second instance. So on a longer time frame, this is the weekly chart of Bitcoin. This is the first time we're closing, which was last week. This is the first time we're closing above 60K. That was 61,000 close last week. If for whatever reason we sustain where we are currently at the end of this week, what this means is that we're likely going to have a continuation. Technically speaking, you will say that, okay, well, because you have this kind of candlestick formation, you can expect a reversal. But one, we're not yet oversold or overbought on the oscillator, which is the relative strength index. So it means that we still have enough momentum to go higher. Secondly, we don't have a confirmation candle coming down next week. I think the price next week is probably just going to range before options expiry. Options expiry is next week, which is the last Friday of the month. Usually a lot of volatility between Tuesday and Thursday. After that, the spot market is free to take the direction it wants to take. But as I said, my near-term projection, where current price is 74,000 Bitcoin. For Ethereum is a bit tricky because it has been reluctant, let me use that word, in picking up at the same pace as Bitcoin. But in the near term, I think 54,000 is good. But we still need to break this all-time high resistance because there seems to be very, very strong sell orders around all-time high. So But I think Ethereum would, once Bitcoin hits 70,000, I think Ethereum would break 4,400 and probably cross about to 4,600 region uh, in the near term. So that's the perspective. In terms of dominance, Bitcoin dominance bounced, like I told you a few weeks ago. I've been on an uptrend since then. We've dropped now for this last 3 days, which means it has given room for some odds to start popping, and you'll have seen some odds on your apps that are beginning to move, and that's because Bitcoin dominance is dropping. Bitcoin dominance dropping means all coins are taking some of the funds that have hitherto gone into Bitcoin. I expect that Bitcoin dominance will hit support around 44.9, which means Bitcoin might start moving up again in the coming days. So that's that in terms of the charts. Like I said, comparing this 2013 chart to 2021 charts, you will agree with me. I think I need to do an updated version. You'll agree with me that the October breakout has started because now we're broken out. This was taken at the beginning of October. Broken out now, we are here. And just on the back of this particular chart analysis, near-term target is 120,000. Well, I mean, that's still a long time. 120,000 is probably going to be November. But for me, I think we need to first get to 70s first before getting to 80s, 90s, and 100s. So this is still very much a play. It looks like it's actually still going to happen exactly the same way it happened in 2013. In terms of profit taking, yeah, which is what I wanted to talk about today, really. Everybody must be prepared to take profits at some point or the other, or what you call have a strategy, portfolio strategy. And the reason is that if you don't have a portfolio strategy, sometimes you might come up with a sense of loss if the market fluctuates significantly. So, like I said, I have friends that felt bad when the market tanked in May. Now, I mean, felt depressed because they felt like, oh, my account was so buoyant, like, I was seeing hundreds of thousands and I didn't sell. And I said, but yeah, so if you have sold, who told you that you'll have sold at the very top, knowing fully well that the bull run was not yet over and that even if the market tanked at those periods, I mean, like it did. So if you had sold when this market was at 65, let's say even cut the top accurately, or sold at 60 and was feeling cool with himself that, oh man, I made a killing, when would he have bought back? And that was the question I answered. When would you have bought back? When would you know when to buy back? And how would you know that the bull run was not over? So, but because these things are mathematically programmed, it's somewhat clear, and we do have an idea where the market is headed and when the cycle is likely to end. Now that we're sure that the cycle is going to come to an end because we've broken the previous all-time high, just like we did in 2013, becomes imminent for you to ask your question to yourself: at which point is enough, or at which point is your bus stop? If I may use that word. When do you consider yourself fulfilled in your investments? And there are various ways to play it. If you took the investment management class, you remember me talking about having a short-term, long-term, medium-term strategy and what you want to do, because you're better off knowing what you want to do before you get there than finding yourself all of a sudden with a huge stash of cash and being completely bereft of ideas on what to do. So on the back of that, it's important to first analyze your portfolio. If your portfolio is, let's say, Bitcoin, and you're stacking Bitcoin for, let's say, your retirement, as an example, if you are my age mate or in my age range, you're stacking Bitcoin for your retirement. There, it doesn't really matter if Bitcoin is 100K or 50K. Or if you're a good swing trader, you can say, I'm going to sell Bitcoin into fiat at the peak of the market. Then when the bear market comes and it's selling at, let's say, 50% discount or 40% discount, I'm going to buy it back. That's a strategy. Another strategy might say, you know what? I'm just going to enjoy myself. I can't keep myself. Once this thing come out like this, I'm just going to blow it and blow and enjoy myself and wait for the next bull run. That's another strategy. Another strategy might be, move all the assets into fiat or move all the assets to Bitcoin and hold it and say, I'm just stacking sats. Another strategy might be, I'm moving all my assets to fiat or US stable coins, and then I'm moving them up the exchanges, or I look for passive income opportunities, which is another. I think I've taken that course once. Probably should take it again. Passive passive income opportunities during the bear market, and then plug the money there and let it just be breathing and yielding dividends. Or another one might just be saying, you know what, I want to sell it all off, then wait for the bull run to be over, then start buying altcoins, multiply my money. There are there are various strategies that you can apply. But it's important to start thinking about it now. You need to think about it and then think about what you're going to do. Because if you're not thinking about it and an informed, you don't have an informed decision, or well, a pre-planned decision, you might get carried away by the euphoria of price action when the time comes. Because imagine you put 10,000 into the thing, and all of a sudden it's reading 50,000. You might get too crazy, or you put 50,000, it's reading 500, and you're thinking, I'm only 100% away from a million. You can get carried away and the market ends and all the prices crash. So it's important to ask yourself what you want to do. And if there are people that feel that they still need another class where we discuss the strategy in details, get in contact with me. If you have enough people, I'll take the class again to actually go through each of the possible strategies that you can execute to maximize, one, the end of the bull run, two, the discounting opportunities that have been provided when the bear market sets in. As I've said earlier on, I don't think the bear market of this particular bull run will be as long forward as previous ones. One, because we now have a lot of institutional interest, and that will continue to increase. So that will, be constantly tugging on the price. However, it's going to be a sharp dip. I mean, I can almost sense that when the drop happens, it's going to be very, very sharp. Of course, it's going to be sharp. There will be a what you call a dead cat bounce, meaning the price will rebound up again, and people will think, oh, we're never going to have a bear market. I'm sure, guaranteed there will be a bear market, and you need to be prepared. It's like be prepared for winter in summer. At this point, I think I'm done for today. Thank you very much, everyone. If you have a question, please pop the mic open. If you're on Zoom, if you're on Instagram, just type in the question and I'll take your question. Please, if you have a question, please unmute your mic quickly so that we don't waste it. Go ahead, Albert.
My question is just a little clarification that I want. Though you've done that before, but I'll be grateful if you can just briefly explain this ETF, this exchange traded fund. If you can just throw just about 1 minute light on it for me. So get
okay. Okay, so exchange traded funds are like shares, but the shares, instead of being based on a company, they're based on a commodity. So you have exchange traded funds for gold, for instance. It's not based on any company per se, but it's based on gold. So when an ETF is carved out, it's carved out as a security to be traded against a particular commodity. So there's ETF for gold, there's ETF for silver. It is not that you are buying the underlying commodity in this case. It's just shares that are based on specific volume, that commodity. Now, those ETFs are various levels. Of course, they are just, to be honest, they're just money-making schemes. If you ask me, in a simple layman's term, they are just in local language in Nigeria, they're just ujuru, like they're trickeries. It's I don't want to use the word fraud, but they're just they call them financial products. And that's the words that they are. They are financial products. They are things created for people just to buy and sell. They are not real in that. I mean, an ETF is not based for instance, the current ETFs that are being approved by the SEC, they are ETF based on the Bitcoin price on the CME. So just to explain what the CME is. CME is Chicago Mercantile Exchange. It's an exchange that's been around for over 100 years now, if I'm correct. And what they do is they trade all sorts of things there. And creating an ETF is creating something that can be traded. It can be anything, as long as it is regarded as a security, meaning something you trade with the intention of making money from it. And so many things have been packaged as ETF in times past, or even financial products. Example, there have been mortgage debts before the subprime mortgage in 2008. There are mortgage debts that were packaged as securities products that people are trading. They are trading it. And we're making money from trading it. So it's a giant, complicated money spinning system that's just been designed. I don't want to say been designed by the US government, because the government itself might not be known to it, but it's been designed by the bankers just to funnel in money for themselves. So it's shares, like shares, but the shares is based on commodity. That's what it is in simple terms, or in simple definition. But the ones that we have for Bitcoin now, even though it's based on Bitcoin, it's not based on Bitcoin spots, meaning it's not based on the actual Bitcoin. You're not going to get actual Bitcoin, you're just going to get money. So these ETFs are based on the price of Bitcoin, not Bitcoin itself. So it's like buying shares. So I can buy, essentially what this means is that if I buy an ETF like Valkyrie or ProShares ETF, I think it's $40. If I remember very well, based on what was it, that's yeah, the ProShares one I think was $40 per share. Oh, I saw it somewhere. Yes, $40. So they are selling those shares for $40 per share. I don't know how many shares I don't know their total shares, but that's how much they were selling each of those well, you can call them contracts in some other ways, but they were selling at yeah, they were selling at $40. So I don't know to what mark they've done this. I guess they've marked those shares based on the price of Bitcoin when Bitcoin was $40,000. So what it then means is that if Bitcoin now goes to 65,000, this share is going to go up. This 40,000 is going to go up because it is pegged to the price of Bitcoin. So it's not pegged to the underlying asset itself, which is Bitcoin. It's just pegged to the price of Bitcoin. And as a result of that, people are able to buy and sell these things in the United States, like shares, basically like any other any other security. So that's what an ETF is. It's basically shares. But the only difference is that it's shares that is tradable on the open market. So this is tradable on New York Stock Exchange, it's tradable on NASDAQ, tradable on CME, it's tradable on BACT because it's an exchange traded fund. It is different from something like Grayscale Fund. Grayscale Bitcoin Fund is based on actual Bitcoin, but you can only sell it back to Grayscale. By the way, Grayscale is planning now to take their funds to SEC and register it to become a Bitcoin-based ETF, meaning based on actually Bitcoin. It will eventually come, I don't know when, but it will eventually come when they will approve actual Bitcoin ETFs. But I think Grayscale is well positioned because they've been the one that have been the largest Bitcoin product seller before now. They started in 2019. And I mean, their premium blew through the roof all through 2020, 2021. So they're probably in the best position to do that. So ETFs are just shares. They're just shares based on the price of something, but it's not based on the price of any company, or in this case, based on the CME price of Bitcoin, particular ones that they're approving. I hope that answers your question, Kwame, or Albert.
Yes, Doc. I understand. No,
Okay.
I understand very well. Thank you very much.
So if there is no other question, we have to call it a day. See you guys next week, and have a lovely weekend, everyone. Yes.
You too, Doc. Thank you. God bless you.
Thank you very much, Doc.
Thank you, sir. Are you
Thank
giving
you.
out this car?
ẹ lọ gbé.
Ẹ̀yin kọ́ mo bá wí, wọ́n jẹ́ ẹ̀yin náà ẹ̀yin fún wa.
No, but ibi mi náà mo dẹ̀ ń sọ fún yín pé kẹ́ lọ gbé yìí.
Mi ò gbé.
Òkè yẹn fílẹ̀ ń gbà náà. Lukman ọ̀rẹ́ mi máa wá gbé.
Bàbá Ìbàdàn tó lọ sápamọ́ sí UK. Ẹ jẹ́ máa bọ̀ nílé.
Níbo ló ń jẹ́ UK? Òṣogbo mo wọ̀.
Wow. Dr. David.
Sir.
You're doing well.
Oh, it's good to end this bureau with this.
Sorry, who is speaking? I can't see the.
Lukman.
Okalugu. So you are there undercover and they are talking about you.
Don't display.
No.
Mọ́tò ẹ̀ non display yìí.
This is your bureau. This is my exit strategy. Confirm. What else after all this emotional?
In Nigeria, I hope you get mobile police officer following you around.
Oh, man.
This is not bad at all.
Ọ̀rẹ́ mi àtàtà.
Ọ̀gá Wálé of Wales.
Ọ̀gá.
Somebody was asking Dr. Demi, what coin to buy for the weekend? You didn't answer that question.
I already said that I'm not giving anybody coin to buy it because we shouldn't be buying coins now. We should be cashing out. Otherwise, if I give you any coin, that coin might be 2025. So unless you are ready to hold 2025, not advisable to do.
Exit mode. We are in exit mode.
Yeah. So I don't want people to get carried away with there will be a lot of
I know, Dr. Demi, all our coins are stuck, and we are waiting for this exit. It's not happening.
don't worry.
Buy the Jeep. This year.
So I want to buy the Jeep and wait.
Don't buy any Jeep.
Okay.
Usually what's it called? The price of altcoins reacts to the price of Bitcoin. So until Bitcoin goes above 100K, I don't expect most of the altcoins to significantly move. But once Bitcoin adds another digit, then you start to see the fireworks. So I want people to be in the mode to be ready to cash out, because if I keep giving you coins, you can be buying those coins at a very high price, and for another 1 year, you are stuck with the bags. So,
Okay, no problem.
I mean, there are coins, I can give you coins, but then I don't think I think the important thing is that they try to cash out from this one, then maybe from January, you can start looking at newer coins just coming into the limelight.
Okay.
So, from now till the end of the year, I want to, if you don't already have the coins, then there's no point.
I guess what is triggering the question is when you look at Binance and you see some 90% gain, you see some 50% gain, you're like, these are not the coins I'm holding now.
You can't hold all coins.
Why can't I buy this one?
I thought I was the only one that was thinking that too. Because I was
I was just helping you communicate your thoughts.
100%, 70%. Where are my coins?
Turn by turn. We also get your coins.
You also need to understand that you can't be in all
honestly, it's turn by turn.
Yeah, it's a flow of money. It's money flowing from one. So it comes from Bitcoin to the big caps, to the small caps, to meme coins.
Yeah. you know that I bought the YDX at $19 with close to $5,000 US. It's still there now. Not $1 added to it for almost 3 weeks.
Yes, now.
I,
So,
yeah,
I will still
yeah.
leave it because I know that it will get to it one day.
Yeah.
The day
Because-
the day it
Sir,
starts
you
to
are
move,
doing
it
well.
will be like crazy.
I joined I think I bought QNT when it was 400 and something. Now it's at 200 and something. And I'm just stuck there. I am
Just
stuck.
Welcome to our club.
Well, you need to understand that it's every token has they have their movements, so they will move.
Yes.
They will move on their own. I mean, I was telling somebody that I had Shiba I bought for somebody. When I bought it, it was in May when it was really doing well, and then it went down, and it was like 30% loss. And I was thinking, I need to give this guy back his money. And so I was like, I'm just going to sell it and buy something else. So I sold it and bought something else. Then Shiba goes and does 5x on the back of that. And I'm thinking, the guy has not even asked me. I should have just left it. So yeah, if you get carried away by the stuff that the other things are doing, you might sell yourself short.
Yes.
So everybody just needs to be very, very attentive to.
Yeah, I'm a victim of what you just said. I bought Shiba Inu after around the all-time high, and I sold 4 days after I sold at loss of nearly 60%. That was when the thing now did the 4x.
Chai.
4x.
Yeah.
The biggest part of this market is the individual, is the trader, is the self.
Yeah.
This
Yeah,
thing
because
can give you some
takes
emotional roller coaster.
it takes a lot of emotional, discipline and psychological turmoil sometimes.